Today,
Uh, well, today we got lots of really great things to kind of cover in today's real estate backstory. We have a ton of information that we're very excited to share with you. My name is Alan Richardson. I'm the managing broker here.
my name is Ming Richardson, a compliance broker for Maximum One Realty and Realtor Partners.
And we do this every Monday where we kind of start off our day or start off our week rather with you to try and bring up to speed all the comings and goings and everything we see kind of happening in the real estate world. And so we kind of want to jump into there was a new study that came out. Well, actually, there was an old study that came out.
85 years.
So one of the longest running studies that Harvard has, and it's still ongoing out there, is they've been studying what makes people happy. And this for
And
me,
living longer.
and live longer, yeah, but it actually works that together, and it really does come down to, and what I find so interesting is that it's the exact same answer as to what's most important in real estate, and that is it's relationships. It is all about relationships. So just like in life, we need, there's lots of things that we want to do or that we need to help make us happy and live longer. We want a sense of security. We want to be able to do, have learning and growth, emotional closeness, obviously with your spouse, but also with your friends, that kind of
And
stuff.
your community as well.
Yeah.
Church, friends.
Yep.
We're all made to have relationship and
Mhm.
personal contact. So that's what's going to make a difference.
Yeah. And so, even all the way down to romantic intimacy and that kind of stuff, which not for your friends, but for your spouse, that kind of stuff, but fun.
But for your significant other.
But for us at the same time, those same things when it comes to relationships, the reason that folks choose a real estate professional is always trust. And trust is not given, trust is earned. And that comes from having a relationship. The vast majority of real estate agents, 80% of real estate agents, realtors, get their business from people they know and people that know them. And so it's a relationship business. So just as in life, so goes real estate. And so I just kind of want to make sure that a lot of times, like things are busy. There's a lot of things going on. We're seeing a lot of activity pick up, but still, please understand that what's most important in our industry is
relationship.
Really is. So that's the thing. That's the kicker
pick up
here.
the phone, start dial. Was it smile and dial?
Smile and dial. There we go. All right. We want to kind of jump into more like immediate matters here, kind of thing, if that makes any sense. And so the inflation slowed to 6.4%, and you'd be like, whoo, all right, we got, inflation came down. We're so glad to kind of see that. And you can see it was 6.5, but inflation came down to 6.4, and the markets went nuts. And people were like, this is terrible, right? And so you're like, okay, how does inflation slow, but yet the markets went really bad? And that really, it turns out that the consumer price index, the CPI, and so it jumped by 0.5 point. So you can kind of see where the CPI had been running previously. So we saw where last year, you can kind of see where it was kind of going. It was trending higher. And then starting up in like August, September, and October started moving back up again. Then November, December dropped down. We're like, whoo, we've really kind of made a big jump. So overall, inflation kind of ticked off. However, we saw that the CPI in January shot up. And that is what really caused the markets to kind of go nuts for the most part. And so, because we're looking at interest rates, and interest rates have been dipping, but last week interest rates inched back up a little bit.
It did.
And one of the biggest reasons is that shelter costs are lagging. Shelter costs are one of those that takes a while for shelter costs to really come around to the way that the economists really kind of track numbers. And so we've seen where shelter costs for the last 6 months, especially last 6 months, have been dropping, especially rents, the whole 9 yards. But the way the numbers show, it doesn't really show up right on the inflation numbers. And so that's really kind of affecting how we're looking. And so last week or this week, heading into it, we saw where the mortgage rate, it jumped up to 6.32 this past week. Now, don't think that that's going to be a strong trend. This is a lot of it is just a knee-jerk reaction. But one thing that we'd like to kind of share with you, and we want you to kind of understand, is that inflation drives mortgage rates. Yes, the mortgage rates follow the 10-year treasury, but if you really look at what happens with the CPI as well as with mortgage rates, you'll see that they are really very closely tied together. And so as we get, and if you think about when did mortgage rates really start to shoot through the roof? It's when we had our inflation issues. When inflation really started pushing, that's when we started seeing interest rates kind of move up. And so as we've been seeing inflation kind of dissipate or work its way down, and then even though total inflation came down, that CPI for last month, that's the thing that really kind of shook the markets. And the reason it shook the markets is because for the markets, they're looking to really what is the Fed going to do? Is the Fed going to be easing monetary policy? Meaning they're going to stop, raising the federal funds rate? Well, it looks like they won't, because we saw jobs were still really, really strong, and we saw that the CPI was still high. So the feeling was in the markets is that, oh wow, the Fed's going to raise interest rates again, and that just kind of drives them all wonky and that kind of stuff. But understand that there's not a direct correlation, but there is a correlation in there.
But there is a consideration in part of the interest rate.
Now, one thing that we have seen, and so this is from MBS Highway kind of thing, and they went through and said, hey, what's up with activity? And so they send out this monthly report talking about the number, the level of activity and what's happening on pressure on rates and that kind of stuff. And so you can see that here in the South, we're in really good shape, right? And so we have good activity going on in the South. Matter of fact, activity is up 64%. All right, so there's a 2/3 increase in activity level here in the South. And so we're just a real rush. And even at the brokerage level, we can tell you, we see the same kind of thing going on in transactions and that kind of stuff. So, our buyers are out, we're into the spring buying season. So things are really, really kind of rocking. So don't let the stuff happening in the markets and that kind of stuff shake you.
Also, when somebody project a number, look at it as overall, not from week to week basis, or not from a last year to this year. So just look at what is actually doing. Do know the trend, but make sure you know what the basis for those numbers are.
And I just don't ever see us getting back to threes again. I don't.
It could happen. I mean, it'll be one of those miracle things, but that 3% was unobtainable for a long time.
So now one thing that we really want you to kind of share, and we're trying to share with you guys here, is that Americans are getting more in debt. Credit card debt has been really growing. As a matter of fact, there was a new record that was set in 2019, and the pandemic threw everything off, and then the Feds threw a lot of money at everybody, and they paid down all their credit card bills. Well, there hasn't been any more stimulus, and so a lot of folks kind of got used to spending at a certain level, and they kept spending. Well, how they kept spending was through credit cards, and so we see where credit card debt has really kind of started to balloon up. A year ago, it represented about 39% of card holders were carrying debt, and now it's 46% of credit card holders are carrying debt.
It is a concern because the number one thing about purchasing a home is having a down payment. So if your credit card debt exceeds what your ability to pay, then it's going to be a long road before you can get a property or buy a house.
Well, I mean, and you have to look at how much liquidity do you have on your credit report. Like what's your, is it not only what is your debt to income ratio is another one that's very important in buying a home. And so if you're carrying a ton of credit card debt, well, that means your income to the debt you're already carrying, if that number gets around over 41.
Well, technically, to have a great rating, I believe it's less than 25% of the available credit that's charged.
But like on VA loans, that kind of stuff, if you're higher than 41,
the back end numbers. So 43 for FHA, I believe 41 for VA conventional is 34. So I'm not a mortgage business, and so please don't call me on that.
So anyway, really it's just about talking to our friends, talking to our clients, that kind of stuff, about try and keep your spending, especially if you're looking to buy, keep your spending in check. Be wise about what you're doing. Be very smart about how much you're putting out there on credit card debt, because most of your credit cards are in the 20s, 24% interest, that kind of stuff. And so carrying that debt makes the banks a lot of money, but it hurts you.
Absolutely.
All right. So there's a new study came out, says I love you and saving money. And so these are the folks who said that money and logistics were a factor in moving in with a romantic partner. I know that Valentine's was last week, and so 70% of all folks said that moving in with a partner saved them money.
Less than $500. 20% said it saves them about $500 to $1,000, and 13% said it saves them about $1,000 to $2,000 by moving in.
However, 42% of respondents who moved in with romantic partners regretted it, and 17% said they broke up soon afterwards. And I tell you, that's a tricky thing. If you're going to buy a house with somebody, then you're not really like you want to be set up not just emotionally, but
emotionally,
emotionally,
but financially, but emotionally,
relationally, I guess you'd say.
Yeah.
Now we do see where that actually equates into actually more women buy homes, more single women buy homes than single men. Matter of fact, 17% of the real estate market is purchased by single women, whereas men is only 9% or 10%, 9 or 10%, right in that range kind of thing. And so you can see that if you had unmarried couples and married couples, they're going to rule the roost. Roughly around 70 to 75% is kind of where that number has kind of been. But like committed couples, that kind of stuff. So single women are still a really viable, as well as single men, target markets that we could be looking at. Okay, I don't mean targeting, but like
know where your audiences are and
yeah.
know their needs, honestly, because for a single person to a female to buy, their needs may be different from a married couple, and vice versa for a single man. So just know your clients.
Yeah, but I mean, like if you look at like what are the common financial sacrifices that single men or single women make when buying a home, it's very, very similar on that side of things. Also the down payment sources are also pretty similar. Single men have a little bit more in savings and from their primary residence, that kind of stuff, but it's still really close. It's within margin of error. Now, where it does differ a little bit is what single men versus single women. The main reason why they buy a home is just that inane desire to own a home. Like just I want to own a home. But after
a lot
that,
of girls like to move because they're closer
friends and family for the ladies. For the guys, retirement.
Yes,
retirement is the big reason. So like single guys will retire and then they're going to move on that kind of thing. So just interesting to kind of share that. Now, on the good news front, housing affordability conditions are improving and improved. And so we've seen where housing affordability is looking back up again. Okay. Anything over 100% means that it's moving in a more positive direction. So we're definitely seeing the trend improve. It's highly tied to interest rates. And that's really one of the big things about that. And you can see that, here in the South, about 25% of our income is the average mortgage payment, just as far as like having an overall like number that like to be able to reference folks, like how much of your income should go towards housing. Well, here in the South,
25%.
Yeah. And so that's moved up. It was much lower kind of thing, and so 25% really is I feel like the top end of that. But if you look at the rest of the numbers, so Realtor.com went out and released, you can kind of see where our active listing counts. So active listing counts are up a little bit. We're up over 2021 and 2020, but you can see that we're still significantly lower than 2017, 2018, 2019, 2020. We're up. As far as not up, down. We're down significantly from those years, and those are all good years in real estate. Total listings, however, like those are active. These are total listings. Total listings are still down. We're under 2022 or over. I can't get my over unders today are just kind of all over the place. So you just gotta.
We're over 2022. So I'm sorry, 2020 actually still. The 2020 is the blue line. That's right at pandemic. So, so 2021, we're over that, but 2020 and also 2022.
Yep. So, let's see. So pending listings, and this is one that I found interesting because pending listings, those are the ones that they're preparing to close. And
Mhm.
if you look at like where we were in previous years, we're not in terrible bad shape. Like, as a matter of fact, we're looking good. Our pending listing counts are actually up.
Above last year.
Like our pending listings are up, and so that, pending contracts, that's the one that's kind of an indicator of business going on. And for us at the brokerage level, we've seen that same kind of thing. We have a lot of things that are preparing to close moving forward. New listings, however, new listings for homes on the national average are under.
Way under.
But that's not Georgia. That's not here in the South. Because if you look at actually what's happening in the South, and you can kind of see that like, on new listing count. So for the Midwest, the Northeast, and the West, all new listing counts are down. But if you look at new listings in the South, right here, 5.4, new listings are up. And so that's the thing for us that we have to understand that we're the anomaly, like we're the weird ones, and we're okay with that. One, because we need that inventory. Like we're not going to sell. I mean, we need inventory to be able to sell. So seeing that inventory open up is a really important part for us. Total days on market are up, but they're still significantly less than they have been over the last 5, 7 or 8 years.
2 months and couple days. So we're right 2.5 months. And typically, like Alan said before, 6 months is a flat inventory.
Yep.
So we're still in a seller's market pending on the price.
Yep. Now, and speaking of price, we keep hearing folks say, well, I'm just going to wait until prices drop. Now, you can kind of see the last 6 years kind of, if you look at where we are
national
versus
average, I believe, right?
Yeah, these are national numbers. Our numbers are even higher than that. But still, median list price is trending over last year. And we've been trending, and we're going to continue to trend, especially here in Georgia. We're not seeing property values decline. And that's super important because when you're talking to your friends, to your clients, like that's the metric that they measure as to how the real estate market is.
Right.
Is my house worth as much today as it was yesterday? That's the number that folks want to know. That's what they want to hear from you. And you can with confidence be like, yeah, property values are continuing to rise. And so if you want to wait till next year, well, I can sell you the same house for more money next year, kind of thing. I think I must have missed something. All right.
Yeah.
So price reduced. And so you can see that our price reductions are, a little bit less than they were in 2019, but really our price reductions are still high. And so we're still seeing where we have a lot of sellers that are still kind of pushing that price point, still wanting to hold out, that kind of thing. And then they end up taking, like listening to us at some point.
Yeah.
And
that's a healthy conversation because at the end of the day, you do represent your seller and you do want to maximize their income. So with that said, just make sure you kind of have a really consultation up front and let them know that, hey, if we have a lot of activities, but no offers, it's an indication that the price is too high, or no activity for within the first 2 weeks and your price, it is all price sensitive market.
All right, I want to talk a little. So Mike Dupree, he is one of the real estate gurus out there. I mean, really big brain kind of guy. And so he does a lot of information or shares a lot of information about iBuyers. And we get so many questions from agents and consumers. And honestly, in the real estate world, like iBuyers take up a ton of mental headspace kind of thing. And so we gotta, and so one thing he shares and I want to share with you guys is kind of what's happening in that iBuyer space. And Opendoor is the biggest one now since Zillow's out of them, kind of thing. They're kind of the big dogs. And so Opendoor's purchases are down big, and you can kind of see like for the last couple of years kind of what's been going on. They slowed during the pandemic, but then they ramped right back up. But then they've been really, really slowing down. They've been slowing down significantly. You can kind of see what's happening. This is just their, what they're doing with their purchase volume. And the reason that they're slowing their purchase volume down is, I'm sorry, it's their new listings. Sorry, you can kind of see that's what they purchased, but this is what they're listing out here as well. Both these volumes are huge down, but this is why. And so you can see that their buy to sell premium, meaning from what they buy for versus what they sell for, they're losing money on every single house. And so that's been a number that's continued to kind of drive them and push them kind of moving forward. And I'm not here being like, woo, yay, Open Doors crashing. And I don't think they're crashing. They have a lot of money. They're very sound financially, but they you can't keep losing money for forever and never make money. And so what we are seeing in this space is that they're moving more into traditional real estate. You know, they're another one of these companies that kind of came in. Zillow is kind of the same way. Like we want to change how people buy homes, and we want to change this, and we want to change that. And then after a while, they just bash their head into the market for so long. And now we're seeing where they're competing with us. Now they want to go and they want to be the buyers, and I mean they want to represent buyers and sellers, and they're acting more and more like a traditional brokerage than anything else right now. You can see why, right? They're losing money on every single one that they're doing, so they're having to change their business. So keep looking for Open Door to kind of shift and grow. I'm sorry, did you?
That's okay. Real estate's about relationship, y'all. Like when Zillow figured out with their product to do the automation showing, automation unlocking the door, automation everything, where there's no really seller and buyer can just do everything, you know, virtually. And what they see, that model does not work. So what do? They go back to their traditional business, which is to sell us our referrals.
Yeah.
And that's because they use our data to sell for us, to sell, you know, to us.
Yeah.
And so that's what they were great at and still good at.
So in the new construction arena, thank you. Townhouse construction has now shared to a 4-decade high. And so we're constructing more townhomes than we ever have. And if you look around at the new developments going on, I can tell, especially
there's a lot.
I mean, across the South, I mean, pretty much all the burbs around the Atlanta metro kind of thing. If you look around the PVC farms, you'll notice that those little PVC pipes are really close together because those are townhome neighborhoods. Townhomes is one of those products that the builders can afford to build and make money on, and buyers can afford to buy. And so, you know,
and this is nothing against the builder, y'all. The builder are here to continue build for the future. So therefore they have to make some money. And during the COVID season, I do know that their material costs and labor costs shot up twice what they were, sometimes 3 times, depending on the product, more than they anticipate. So therefore there were a price adjustment right before closing. And I understand it's a hardship on the buyers at the same time, but now they're moving to a product where it's safer for them and not having as much risk.
Well, the other thing is but I guess my caution here is that there's a lot of realtors, and when I say, you know, it's great seeing all these townhomes, and they kind of get that sourpuss look on their face.
Yeah, townhomes now,
and they're like, ew, townhomes. And so if you actually look at the graph, it kind of illustrates kind of what we saw. Like in 2004, 5, 6, townhome construction was massive, condo construction as well. And then the 2008 crash happened. Boom, yes, construction dropped off, but what happened was we saw entire townhome communities, neighborhoods, condos that just, you know, like they got hit even harder. And so we ended up with a lot of investor-owned properties in 2009, 10, 11 that were hugely investor-owned. We saw pride of ownership go down. We saw the maintenance go down. And there was a lot of agents who were just like, ew, townhomes are nasty, townhomes are gross, that kind of stuff. And now
the new townhome has such a restrictive CCR that they actually are well kept.
Well, and now not every townhome is a value townhome, but we are seeing where, you know, for our first time buyers, especially like when we bought our first home, that was that 3-2 ranch kind of out in the boonies a little bit. And so, but our first time buyers today, they don't want that. They want to be close to city service. I mean, to social services and convenience and restaurants and shops. And they don't want to, you know, they don't want a yard to mow. They don't want to mess with maintenance. They just want to be able to come and go as they please, kind of thing. And so this fits in with a lot. And so we're seeing where that product is really kind of moving forward. just don't put your own bias in there, I guess is what we're trying to say about that.
A few years back and versus what is today is two different things.
Well, the other thing is if you're in the suburbs thinking, well, townhomes is much more an urban thing.
It's not.
It's not, they're everywhere
We're
now.
seeing a lot of mixed use right now that's
Yeah.
being approved by the municipality and as well as an area that you wouldn't think that they would approve.
Yeah, we have 910 townhomes under construction in Henry County right now,
Mhm.
or permitted and about to begin construction right now. 900. I mean, that's significant right there. So the builders are optimistic, which is also a nice change. You know, they actually jumped by 7 percentage points this month, kind of thing. And so they are feeling very much better about that. That being said, you know, they've had to be realistic on, you know, like they're feeling some of the same price pressures that, you know, like when we say,
Yeah.
you know, a lot of our sellers are coming out and having to do price reduction. Well, guess who else is doing price reductions? And so 31% of builders are reducing home prices in February, down from 35, and which is, you know, I mean, they're in the 30% range. A third of our builders are reducing prices.
Well, some of the costs has come down since during the height of the material costs and labor. So it's stabilizing a little bit. So therefore, they're probably gonna offer that a little bit better than what they could have during the height.
And so, you know, we see more incentives, price reductions in the 5 to 6% range, and then a lot of incentives. So we're seeing a lot of closing costs, upgrades, other incentives that the builders can do. So, you know, if I'm representing a client in a new construction neighborhood right now, I understand that you know, we have a lot more as a
Mhm.
buyer, has a lot more say, power, a stronger position.
Leverage, but just understand builder is gonna do at the end of the day what the builder is gonna do. So read that contract very carefully.
Oh, yeah.
We have one that was contingent on us, on the buyer selling their house, which is, you know, almost guaranteed on this, because the buyer lists their property very at a just right below market, have multiple offers, but the seller, the builder would not allow the buyer to have a unilateral just in case the other side falls through.
Yep.
And this is one of the instances where earnest money, once it's given, is non-refundable. So there are builders out there like that. Now I have to give a clap to D.R. Horton. They're really good about giving back the earnest money if it's something out of buyer's control.
All right. Well, this week, tomorrow, we've got Building a CMA by George MLS over in our Noonan office. On Wednesday, the High and Y. They're going to be talking about all things pest control and
Hey,
pests
you
and how
guys,
that
I know
works.
you guys probably taking pest control CE before, but because our climate changes, there are also new things they're finding. So do go there for, if nothing else, awareness.
And then who's teaching on Thursday, Ming?
License law.
This
In
chick right here.
person.
Yeah. So Ming's
So-
going to be teaching in person over our Noonan office on
So if
Thursday.
you guys need your license credit, please take them now because it's gonna be a little bit before I teach it again.
All right. Well, thank you guys. We hope you have a wonderful week. If we can be of any service, please call, text, smoke signals. We answer it all. Love y'all. Have a great
Thank
week.
you. Have a happy Monday.
Bye-bye.